Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for our Cannabis Investor Conference. Our first live presentation will be a panel with Glass House Brands, moderated by Adam Carlson, Managing Director, Investment Banking at ATB Capital Markets. Before I introduce our panelists, a few points to note. Please submit your questions in the questions box to the left of the slides. If you're interested in scheduling a meeting with Glass House Brands, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Kyle Kazan, co-founder and CEO, Graham Farrar, co-founder and president, and Mark Vendetti, CFO of Glass House Brands, which trades on the OTCQX Best Market under the symbol GLASF, and on the NEO under the symbol GLAS. Welcome, Kyle, Graham, Mark, and Adam.
Thanks a lot for having us.
Thanks very much, Phil. Well, welcome to everyone today. Pleasure to be here. My name is Adam Carlson, as Phil said, with ATB Capital Markets, and happy to have one of the leading companies in California with us today. I think we're going to learn a lot over the next 30 minutes. We only have 30 minutes, so we are going to move quickly. It is going to be quite jam-packed. We're going to do a bit of a lightning round here with questions. But first and foremost, I think that as you get to know the company increasingly better, you'll find that they are extremely operationally focused. So we will be starting on operations now. So first question, in Q3, this was your first full quarter of operations at your Southern California facility. How has your bet on the greenhouse facilities paid off? And how do you view the overall current wholesale landscape, and where do you see it going?
You know, when we started this company back 2015, 2016, we had consulted with ag professors because cannabis is ag. And so the thing that they basically said was anything that you were seeing indoor in, say, Colorado or Washington was trying to replicate the sun. And the lights they put in, the air conditioning, everything was trying to build a climate. And they said the best thing you can do is a greenhouse. You can control the climate. And at the end of the day, that's the way ag is done. There's no other product in the world really that's out there in any kind of scale being grown indoors. And so ultimately, we bought a couple of greenhouses up in Santa Barbara, California. Graham and his team did an amazing job of growing great cannabis with low COGS. And then when you asked us about greenhouse, the thing that differentiates us and the reason that we're public is so that we could buy the unicorn facility. And I would tell you that the third quarter absolutely meted it out. The numbers showed that we could grow great quality cannabis at the lowest prices. I don't know anybody who has lower prices than us. So we are very, very excited. It was a little bit nerve-wracking just getting there because, you know, look, it's a tough market. Capital's not cheap. And everybody else who tried to build big greenhouses had some difficulty. So I'm really excited.
Yeah, I can add to that too, that, you know, I think what we're seeing in the greenhouse is absolutely proving out our hopes and, you know, expectations and our hopes down there. When you're growing, when your goal is quality, consistency, and cost, right, you really kind of need three things. You need Mother Nature to be in a conducive climate. I think we've got the best climate probably anywhere, certainly in North America for growing cannabis in Camarillo. We get even more light than we do where we came from in Santa Barbara. You need a great facility. We have literally the most high-tech, most efficient facility. It's the second largest greenhouse in the United States of any crop. It is now the largest cannabis greenhouse, as far as I'm aware, anywhere in the world. It's even larger than Canada because the larger sites there didn't pan out. And then you need a great team. And so we've got the Glass House team that's been growing cannabis at scale, commercially, in a greenhouse for coming up 7 years now. So, you know, this facility was built for tomatoes. Tomatoes are a 5% margin business. You grow a tomato for $1 and you go home and say it's a good day when you sell it for $1.05. Now, we're not looking for 5% margins, but we are looking to bring that kind of thinking to cannabis in a way that nobody else has. And as we sit here, I mean, we went from $185 a pound COGS to $150 a pound COGS to $134 a pound COGS. And we think that we're going to be able to continue that trend with the goal being highest quality, best cost, and we've got all the pieces to make that happen. So I think very, very happy with the bet that we've made and excited. I mean, we're not even at the 1 year anniversary of operations yet, and we're already starting to see the outcome and the results that we were hoping for. Give the team another, get to the 1 year anniversary where they've actually seen each day of the year. And I think we're going to see really exciting stuff.
That's a great segue into the next question. So obviously you've got such a focus on both cultivation and production, just sticking with the greenhouse itself. How do you balance, increasing your operational efficiency and maximizing output with, the focus on unit economics and the focus on quality? How do you bridge those two pillars?
Yeah, so I think, that really, it really comes down to the facility, right? So I got kind of a joke, which is if you stand on top of your cannabis grow and you look around and see office buildings, you're probably growing in the wrong spot. When we stand on top of our grow and we look around, we see ag for miles in all directions, outdoors, 12 months out of the year, right? So we start with a very good fundamental building blocks that Mother Nature gives us of, it's basically 72 and sunny. As Kyle said, everywhere else in the world, whether they're indoor or outdoor, they're basically trying to recreate this climate. You go to Massachusetts and you're spending $25,000 a month per acre on electricity that's coming from burning coal to recreate what we get at our SoCal facility for free. So we live in this really envious place where it's not a, do you want it cheap or do you want it good? What we're really going for is the motto we use is quality, consistency, and cost. So first you got to do it great, then you got to do it great every time, then you got to do it great every time efficiently. And that's exactly what this facility and our team has spent the last 7 years. So we might not be well known everywhere because we're a California focused company, but we're not new. This team has been growing 500,000 square foot of greenhouse cannabis in California, the most competitive market in the planet, with the most discerning customer, and has a top brand at one of the best and most competitive prices out there. And that's before we got to SoCal. So, our real goal is basically to grow indoor quality flower at outdoor COGS. And every day I feel like we get a bit closer to that. And when you look around in the market, you see at the same time that we're looking at expansion, we've seen almost 1,000 licenses since July fall out of the market. That represents about 10 million square feet of canopy. So that is our entire 5.5 million SoCal facility times 2, completely filled up, that's left since July. And so we keep pushing, towards that higher quality, lower cost, higher quality, lower cost. And, the pricing's been destructive. Our plan, and I think where we're getting to even now, is so far on the left-hand side of the cost curve that what happens cyclically in the market with pricing, almost just, sometimes we're going to make a little money, sometimes we're going to make a lot of money. Pricing does what it does. We drive down our costs and increase our quality. And I think we've got a flywheel that's going to be very hard for anybody else, anywhere else to compete with.
And on the flywheel, if you look at Andrew Carnegie, you look at Rockefeller, you look at Sam Walton, Jeff Bezos, you say, okay, what is your differentiator to get those costs down? Because all of them cared about cost. They said cost is forever, pricing is cyclical. And if you wanted to replicate our farm in California, you'd have to buy the next biggest 50 farms spread around the state. And it's going to be very hard to get that kind of efficiency that we can get on one site in 50 desperate properties and locations. So we feel we've got a bit of a moat as well.
That's great. And part of the next question, just focusing on, your vertical integration with retail. It's no secret we've seen a number of retailers have to shutter doors given the economic conditions in the state. What's been your secret sauce? You guys have been doing the opposite. It's, everyone is swerving right, and you guys are going left. You guys are adding organically through M&A, and it looks like you're on the front foot. Maybe just describe your retail strategy here.
I think when it comes to retail strategy, right now we're 9, soon to be 10 stores. We've always been forward facing, meaning what does the world look like in 2 years, 5 years, 10 years? Eventually, there won't be just marijuana dispensaries selling cannabis. I mean, we've seen Circle K and GTI, and eventually it's going to be spread everywhere. So for us right now, retail is important, and so we look for locations that are relatively limited license for now. Again, I think that goes away, but we'd like to continue our expansion either through management of stores or to buy stores that put us in about 80% of the population of the state of California. But again, I think the idea that, going and chasing as much retail as possible is probably not a great long-term outlook, but it's very valuable for us because at least today, we sell 15 times as much of our own products in our stores as we do in other people's stores. And so, and the data that we collect from our 9 stores, anybody in California who goes into a store gives their driver's license. So the data collection is immense and very valuable. So for us, we think it's very important today. Long-term strategy, not to be the biggest retailer.
Yeah, I think I would add to that too. Add to that it is vertical integration is not a default right strategy, but in a market like California, I think it's an essential strategy to survival because the way that we are, right, we have our cultivation, we have our wholesale, we have our CPG business, we have our retail business. We have a lot of levers that we can pull as the market twists and turns to make sure that we end up in a smart spot. So as Kyle mentioned, our stores, we're very picky about them. We look for limited license moats. It's kind of a misnomer that California is this unlimited state. Currently, as we sit here, 60% of the municipalities in California don't actually allow cannabis retail. So today, having control of the shelves, and even more importantly, knowing you're going to get paid by their shelves is really important. So with our goals to build brands that we eventually believe we will export out of California, having 10 stores that perform for us like 150 stores that we know are going to pay. I mean, there may be 400 paying stores in California right now. Our stores, essentially feel to us like a third of the paying market, and we can decide to make brands and products by the fact that we can put them on the shelves. We can get the feedback. We can drive things like when we make an acquisition like Plus, we can make sure that it gets out there, right? So I think Plus started as a top 5 brand, almost in despite of itself. Now that we've synergized it with our stores, it's going to grow because we can make brands grow by changing the multiples of how they sell because we control those shelves. We can invent new brands like Allswell. We can make sure they get to consumers. We can also have strategic ability to do shelf swaps with other brands, right? So if you got 2 brands competing, one has a store that you can say, hey, we'll put your brand on our shelves if you do the same versus one that doesn't, it's a pretty easy to decide who wins on that. So for today's market, I think that vertical integration is a very strategic place to be in California.
And one thing most people don't know, in California, you don't have the luxury of just saying, hey, I'm going to put only my brands on the shelves. That's done throughout the country, not here. The California consumer is discerning. We must carry other people's brands, and we proudly do. And even our competitors must carry our brand, or else you're going to drive away the consumer. So we're sort of where the puck is going, if you will. And so we're excited because we know this is the future. And so for all the other companies that are just loading up with their own products, that's not what the world's going to look like. If they want to see what it looks like, just fly into LAX or San Francisco and go to some dispensaries, and you'll see. Nobody has the Trader Joe's model out here.
Yeah, 100% agree. And just one tail on that. I think that, California is a challenging market. Everybody knows that. But part of it, the challenge is competition. And competition actually has some pretty significant upsides, right? Like competition breeds excellence. California is like training at altitude. You don't train at altitude because it's fun. You train at altitude because when you meet someone who hasn't, you win, right? In California, the consumer here, they've 27 years into this since the medical legalization. So the competition here tells you when you're right. And more importantly, it tells you when you're wrong, right? So when I say Plus is a top 5 edible brand, if you were in Illinois, top 5 would be last, right? In California, it means you're better than 1,600 other brands that want to kick you off the shelf, right? Not to put a point on it, but there's brands that are like Wana, for example, has left California. Select is leaving California. Cresco is pulling out of California, right? Like these are brands that are not finding a home here, right? Because the competition is so strong. Eventually, the future of the rest of the country looks like California. Eventually, we have a free market because that's what America's about. You see CPG, you don't buy Wyoming wine in Wyoming. You drink Napa wine in Wyoming because that's where the best wine comes from. And I think, you probably don't have a favorite non-Mexican tequila brand. For 8 out of 10 people, cannabis comes from California, and the brands that win here are going to win everywhere else. The inverse of that is not at all true.
Great. So I'm going to start just in the interest of time, combining some questions that we had, and also for the audience to know that we are combining questions in and taking that directionally for what the group would like to hear from. So scale and is obviously a massive importance in California for you. You have a highly fragmented market. You have distress financially for a number of these players. How does this play into your longer term advantage? And then coupled into that scale question, what would you figure your long-term goal is in terms of cost per pound?
I can take that one. So long-term goal cost per pound, we've been pretty consistent. And I think if anything, are probably more optimistic than when we started of growing at $100 a pound. I think we're making good progress towards that. And we're just getting started with a new SoCal facility. As we've mentioned, we think that farm is really special. We really think it's a unicorn. If you look at the efficiency, the climate that it's in, it has things like we have 3 cogeneration plants on site. We make our own power. We make the power cheaper than we can buy it. We get free heat and we get free CO2 from it, right? So if you had every other thing that we have as an asset and you miss that, we can still beat you by 10%. If you had that and you didn't have our nursery with automation and the ebb and flood floors and you had everything else, we can still beat you by 10%. We've got roof washing robots that keep the glass clean so that we maximize every photon of light that Mother Nature gives us. So it's these pieces and the scale that we have and the ability to make investments and amortize them over enough size to make them make sense that I think is our real fundamental advantage. Anywhere that we can invest in CapEx to improve quality, consistency, and lower OpEx, we've done it. And now, we've been doing those investments over the last 2 years, right? And so now those investments are all starting to pay fruit. Even if somebody started today on our path, it would take them years to catch it. So I think we're going to be in a position where there's literally no better cannabis for no better value than what comes out of Glass House anywhere in the country or even North America.
And just as a follow up, you have Graham and I as co-founders. Graham's a tech guy, so he's living Moore's law all the time. Twice the speed, half the cost. And so we use technology, and we'd love to welcome you out at the farm. We'll show you some things that are not being done anywhere in the world in cannabis that we think gives us a significant advantage today. The other thing is, with my real estate background, when we bought this farm, about 1.5 years ago, when we bought it, insurance said to replace what's there. So forget the 165 acres of land. Let's just call that a zero. Was $250 million. We bought it for $93 million. Plus, we paid stock for the option. But we bought it well below replacement cost. So all along the way, we sort of lean into the strengths that we bring as a team and trust each other. And so Graham has done an amazing job with his team. And I am always blown away by what's going on at that farm. And, we've seen a lot of other competitors out there. Literally nobody's doing what we're doing. So we feel really great. And all of those things contribute to either bettering the quality or lowering the cost or both.
And
Excellent.
I think it's
so
important.
We'll step back now.
We can see the results of it too, right? Because people have attempted things no one's attempted, but like using our Q3 numbers. In Q3, we grew and importantly sold more cannabis or as much cannabis in that quarter as we did the entire previous year, where we were already a big grower, right? So to contrast that against some of the things that have happened in Canada, where people have tried new things, but according to the reports, 80% of it gets thrown away. That's not at all what we're seeing. We're seeing quality improve, costs come down, and the market asking for more than we even have available right now.
Okay, great. So we're getting a number of questions from the audience here on wholesale flower prices in California. Obviously, this flows into. We have the experts here on the line to answer that question. So, where are we on wholesale biomass inventories? You think overall in the state, broader market, and how are we looking at flower pricing in California right now?
Graham, why don't you take that one?
Sure. Yeah. So I first would say we've been head faked before. We probably have some PTSD over here, and so a few weeks to now a few months of a trend. We get cautiously optimistic, but save our optimism for a bit more experience. But what we are seeing is at some level what we thought we would eventually see, because pricing was so low that we considered it destructive. We don't think that there's enough people in the market that can make money at the prices that we were seeing. And so that what we're seeing now is and this is unseasonal, so add that to that. Typically, Croptober, you'd see softness in pricing from October through, call it, the end of February. What we actually see through that period is that inventories are very low. People are sold out in California. There's a lot less acreage planted. We've got 1,000 licenses, which represent about 10 million square feet of canopy that have left the market. Oregon's reporting similar. Washington's reporting similar. The market at this point feels like it's very low inventory. We're currently selling it faster than we can grow it. And as a result of that, we're seeing prices move up. And, frankly, we think back to a more sustainable level. For us, again, being on that left-hand side of the cost curve, the prices that we're now at are very comfortable. We reported early preliminary numbers. I think it was about $206 to $236 a pound ASP from Q3 to Q4, represented about a 13% price increase. That trend has been, continuing, and we keep our fingers crossed that it will keep doing that. And from what we can see structurally, the pieces are there for a pretty solid market. And again, seasonally, this would be a soft time of the year. We're now going to spend the next 6 months going into where prices typically firm up and supply goes down. And from what we can see, it's certainly some green shoots and giving us some cautious optimism at this point.
And it should be known when you're tracking things, the licenses are annual licenses, so it's a trailing trend. So someone may turn off and still have 6 months of a license and just say it's just not worth growing, and we won't see that license turned off for another 6 months. So we're watching the trends, but know that there's a lag time. But so far, everything seems to be it's moving from destructive to, as Graham said, what we hope is a sustainable market.
Okay, great. So we're going to transition now to more financial oriented questions. That seems to be another popular topic the audience is asking here. So I'm going to combine two or three of them. When do you expect to achieve sustainable positive cash flows from operations, and how would you describe your current state of your balance sheet?
How about if we let our CFO, who has been patiently waiting to answer a question, this feels like a softball to him. By the way, here's a football player. This feels like a lot. This feels like a Hail Mary to Mr. Vendetti.
Thank you, Kyle. So we have been consistently talking about getting to positive free cash flow in our third quarter. So basically, two quarters from where we sit today. And when we get that, the key is in our current configuration. We are a sustainable entity, and that's again based off what we have. It doesn't assume we're bringing on new stores. It doesn't assume we're bringing on new capacity from greenhouse from our Camarillo facility. So it's it's Q3, and just as our listeners again think about our business. Given the seasonal nature of the greenhouses, the second half of the year is always going to be stronger than the front half of the year, just because we get so much more production out of our greenhouses in the second half of the year. Then moving over to the discussion on the balance sheet, we have a pretty clean and simple balance sheet. We only have the $50 million of secured debt related to the first phase, the build out of our Camarillo facility. And then over Q3 and Q4, if people have been following the company, we have been raising preferred equity. So right now on the balance sheet, we'll end Q4 with roughly $55 million of preferred equity on the balance sheet. The key for people to consider on that is, of that $55 million, roughly $23.5 million replaced existing preferred equity. So it's not net incremental. It's just switching out the existing preferred A into the preferred B. And then we actually used $10 million of the proceeds from that to pay down a short-term bridge loan that we got from our secured provider to help with the NHC acquisition. So those are really the two big things from a capital structure if you look at what's out there for the company.
Great. And how has your ability within capital markets changed with bearish nature across the overall sector here?
So that's been not the easiest thing to navigate, but it's something that we all in cannabis have to deal with. We're federally illegal, safe banking hasn't passed, things like that. But the fact that we own some unicorn facilities, and when I say own them, these are valuable assets, and so we've been able to that really helps us. That helps us on our balance sheet and helps us raise money. The other thing is we've consistently said that the third quarter of this year that we will hit free cash flow positive, and we have not been banking up 280E liabilities. So we've been when it comes to where we're moving and the numbers, that's when you talk to investors out there, that's what's most important to them is they want to see that this is going to become a very viable business with a lot of upside. And the fact that, quite frankly, 80% of our large facility is vacant when you consider it's not growing cannabis. It's growing tomatoes and cucumbers, but we have massive amount of upside. And just in what we have, we're going to get to free cash flow positive very soon.
Great. So just realizing we're tight on time, probably have time for one or two more questions here. It wouldn't be a good moderator if I didn't at least ask one ESG question on the line here. So how did your years as a police officer enforcing the war on drugs influence your views on the social justice? And obviously you're involved in a number of different organizations such as Mission Green. Maybe you could just touch on this briefly in the couple minutes we have left.
Yeah. So, being in my younger years as a police officer, gung ho, out there to make felony arrests and take guns and things off the streets, I got heavily involved in the drug war. And what I learned, being a thoughtful human being, was this was a complete waste of resources, and it was a war on poor people. And poor people, unfortunately, in this country are mainly people of color. So I spoke out for many years after my police career ended in 1999 about ending the war on drugs totally, not just cannabis, but all drugs. And we've become the most jailing people on the planet per capita because of the drug war. And a lot of people are getting wealthy while a lot of people are rotting in cages, and it's just not acceptable. So the fact is, at the time I started speaking, I never thought I would be involved in a situation like this, where we're a very large cannabis company. We're going to sell, right now, we'll sell about 250,000 pounds over the next 12 months. Meanwhile, 2,700 people are sitting in federal prisons, a lot of them serving quasi-life sentences or life sentences. And you can't have that dichotomy of the law. So I do work very closely with Weldon Angelos and Mission Green to push President Biden to live up to what he said in the debate with Cory Booker, that he would release these people. And instead of having to trade away the so-called merchant of death to bring somebody home, a cannabis prisoner from Russia and Brittany Griner, all he needs is this, 2,700 signatures, and he ends the war on cannabis and also pushes for decriminalization. So it's a very big deal to us at Glass House Brands. We're super happy to welcome Luke Scarmazzo home after his almost 15-year nightmare in prison for running one store in Modesto. One. You asked us about our 9, soon to be 10. So it's a big deal to us. I don't know how I can look in the mirror when I shave every day and look back at a person who's not speaking out about this injustice while we are building a very large and successful company.
Excellent. Thank you for that. And so with 1 minute left, I think that the question on everyone's mind now is, why should I go out this afternoon and buy the stock? What are the key milestones for 2023 and catalysts that I should be aware of?
When you're a federally illegal business, it creates a very difficult situation for you to go buy those stocks. Now you can do it, but not all of the brokers out there will hold the stock. So you open up a Schwab account, you can do it. And so what I would tell you is, at some point federally, if you believe federal legalization is coming, and I think almost everybody thinks that will eventually happen, that the government will catch up, I think we could all assume that things will get easier for cannabis companies. I'm not just talking about GLASF, but for the industry. And I look at this almost like the new industry that we saw with the .coms. Now it's cannabis. And so I'm not saying bet the farm, but I would look and do your evaluation. Obviously, you're talking to people that hold a lot of Glasshouse stock. I've never sold a share. And I believe that as we get legalization and as we continue to execute, we'll drive investor value. And I think there could be plenty of upside.
Yeah. I think I would say,
Thanks
we're
very
sitting
much.
here.
We are open.
Yeah. I was going to say,
think
cash flow
that's a
positive
great way to
California
leave it.
cannabis is coming. Yeah, go for it.
Yeah, no, thanks very much. And I think that that's a great way to leave it. So appreciate everyone's time today. And thanks for the team at Glass House.
Hey, thank you for
Thank you very